President Bostic, welcome back. Nice to see you.
Nice. Harris, very good to see you as well.
So I feel like you might be a little more dovish than some of your colleagues we heard from lately. Just would love to get an update on your thinking about how many rate hikes we're in for and how big they're going to be over the coming months.
So I think I'm in the same area as my colleagues philosophically, in that I really think it's very important that we get to neutral, and we do that in an expeditious way. The really difference in view, I think, is in terms of our thoughts about how the economy might evolve as we are moving. And where I am is right now, I don't think that it's easy to know for sure how strong the economy is going to continue to be as we move through the summer and into the fall, as we increase our rates, because there's so much uncertainty. And, you know, if you think about a catchword for the pandemic more broadly, it's been uncertainty. There's been all sorts of things that we thought we knew were going to happen. They haven't played out that way. And because of that experience, I'm kind of uncomfortable to declare with that much certainty that I know exactly what's going to happen, such that I can tell you exactly how fast or when we should get exactly to neutral, or even if we should go beyond it.
What is neutral? What is the significance of neutral? What number is that to you?
Yeah, no, so to me, neutral is somewhere in the 2 to 2.5% range. And I think neutral is really sort of conceptually the place where the economy is standing on its own, and our policy isn't pushing or putting the brakes on its trajectory. And so I think the economy is in a place where it can stand on its own. And if we can get there, that puts us in a much better position to respond if we see overheating persist or if inflation doesn't respond to the policies that we are putting in place.
I guess one question is how fast you get there. Your colleague, President Bullard, is saying he's not ruling out 75 basis point hike. Is that something that you would consider?
Well, you know, I've been saying for months now that any action is actually possible, although it's not something that's really on my radar right now. Look, I think what's going to happen is that you're going to see a steady march of our policy, assuming that the economy evolves the way it has over the last several months. And as we take each step, it will give us an opportunity to observe and adapt our policy based on what we see. You know, even just now, if you look at what's happening to real wages, real personal incomes. Real personal incomes have grown at a negative rate, or they've decreased over the last 6 or 7 months, and real wages are in retreat. If that continues, there is a real case to be made that aggregate demand is going to slow down in ways that our policies will lead to accelerate, but it will allow us to not have to push as hard. But all of that is conjecture at this point. We're going to have to watch and see what happens and then evolve as we learn the reality.
I guess, so you're more worried about an economic slowdown. What is your pain threshold when it comes to seeing that kind of weakness at the same time that we're still seeing very high inflation rates?
Well, you know, we do have to get inflation under control, and that's task number one. And I do think that it is important that we start to see inflation move back down closer to our 2% target. I do think, however, that some of that's going to happen by actions and developments that may not be associated with us. If we can get supply chains to resolve, we can start to see people come back into the labor force so that employers are able to increase their supply. That can reduce the gap between demand for goods and the supply for goods, which is an important contributor to the elevated prices that we're seeing today. So I think there's a lot of stuff that's going to go on, and how those other things play out will inform how I think about the appropriate course for policy. And that can be stronger or faster than where I am right now. I'm really have us looking at it 1 3/4 by the end of the year. But it could be slower depending on how the economy evolves and if we do see greater weakening than is in my baseline model.